Hello everyone, welcome to Dmvii Live for November 18th, 2017. Keep in mind, stocks and strategies discussed here are for information only. Do not treat any information provided here as investment advice or recommendation. It is up to the individual investor to perform due diligence prior to investing in any company. And here are the symbols covered this week.
Yeah, before you go on, I just wanted to get a feedback from the crowd, how I display these charts. There's two modes. This one is a smaller chart, but on the right you have some news if you want to get to it. Otherwise, I could click in here and give you a bigger chart. I don't know if you prefer that or just the, this is good enough, right? This is good enough?
It does the candlesticks as well. It doesn't all. If you like candlesticks. I don't.
Right. I understand that. I thought that some people didn't want the candlesticks in there. That's okay. You can do candlesticks.
You want to sit here, Tom?
Well, everybody's, the problem up here is that everybody's got a different opinion.
Yes,
So
yeah,
you
we
can't-
can do that. There's your candlestick.
You're the boss,
Yeah.
and you're basically, you make the call, and you're it.
And
You decide what you want to do. And I think I'll be happy, and I hope everybody else will.
yeah. Yeah, the candlesticks. Something different choice on time frames.
So we're back with you, Marie.
Yeah, I was listening to someone recently speak, and they were talking about how bad, the consumer products haven't done so well. But, he named a couple of companies, and I can't remember. It's such a common company. It's a company that produces like Kotex and things like that. I can't remember the name of it. And also Church and Dwight.
That was an old favorite of John's.
Church and Dwight.
Yeah, he mentioned that today. Did you listen to Swada?
It must have. I don't know what his name is. A value investor.
He was on 7 this morning.
I was in the shower. Yeah.
Yeah, he
I didn't know his name though.
Yeah, he mentioned Church and Dwight.
And what was the other one?
He mentioned Newell. He mentioned.
They said they produce Kotex or something.
I think they are.
And I don't.
CHR?
CHD.
And he was saying he felt that the price wasn't all that. It was down a bit, and it was really.
Well, all those were consumer kind of stocks he was talking about that a little later, and he went over that because he's been a big fan of like Constellation Brands is another one he likes.
Well, there was one he mentioned right before this, and it's a common name, and I can't remember, but he was saying the prices weren't, he didn't feel the P ratio, and he felt they were paying out a dividend, a bit of a dividend, which made them better than like T-bills or something, and he felt they'd probably beat out something like that.
Well, that's what he,
Dividend of 1.7.
Yeah, the other one had a dividend of 2.53. I can't remember the name of it though. But Church and Dwight, aren't they the company that produces like Arm & Hammer, baking soda, and stuff like that?
Yeah, I'm in there. He basically thinks though it's always he says it's too expensive for him, but the reason he brought it up is because it's down.
Yeah.
And I think if it got to like $38 or $36, maybe he'd step in. But you got to remember too about him is he made a disaster. He's been in these oil and all those energy services, and he lost a lot of money for a lot of people. And nothing against him. He did well when they were hot, but he really's probably been hurt pretty
Who's this
bad.
guy?
This is Chris Swada.
Oh, okay, yeah. I
The
used to
value investor, he
Yeah.
kept saying.
I used to listen to him. He went so early in the morning.
Now he's
I
at
have
7.
that
He's at 7 on I think
Yeah,
980.
You can go on a
I
Saturday.
was up at 5
The station's website.
doing stuff.
Yeah. You get right any time.
Was Kimberly Clark the other one?
Kimberly
Yes.
Clark,
Yeah.
that's it. Oh my gosh.
Kimberly
I knew
Clark.
it was a common name, but it's just slipping my mind.
KMB, I think.
And he was saying he felt that it gave pretty good dividend. Let's see what it is.
Okay.
3.39. Okay.
Yeah,
He was
that one
saying-
has a 3.4% yield, so that's kind of hefty.
And he felt they were down a little bit, these Kimberly Clark and the Dwight and Church, and he felt like, I mean, people are always going to have to buy these things, these consumer products. I guess you can go to those house brands, which are pretty popular now. The no names.
I think Kimberly Clark has been into a hot tangle there with some scandal.
Are they?
Some mega suit out there about maybe it was about the having the suits for that Ebola virus. Wasn't that it?
I'll tell you one thing he did very well. One of Gobi's areas is advanced auto parts. He was in it very early, and I think that's done fantastic, giving them credit on that one.
So there's a revenue miss in their last quarterly report that probably exacerbated the downturn on late October.
Yeah, I have a comment on this, like large consumer-oriented names, especially the branded ones. They're down for a reason. One is the revenue growth isn't going to be higher because they're mature companies and large enough. They cannot move the needle to a large extent. The second reason is they used to control the shelf spaces to a large extent in grocery stores and supermarkets. And you go there and you know something and you get it. You don't compare it with something like a non-branded or store brand ones. Our purchasing patterns, our buying power among consumers are changing a little bit. A lot more people can show up with a product so much easier today. Like let's say Aldi comes up with like some detergent or something. They can push it to you so much easier at so much cheaper cost. You don't have to wait around to buy like Kimberly-Clark or Clorox or any product. So that is the reason. That is one of the reasons that major consumer products company stock is being down because they don't have a viable strategy to keep attracting the same customer. If you look at the price difference between, let's say, a Clorox and a name state, like a store brand, sometimes like 30-40% cheaper. Like people are slowly figuring that out.
Like the Kirkland brand at Costco.
Yeah, Kirkland like puts right next to you. If you go to Costco, there's a Kimberly-Clark product, a Procter & Gamble product, and they have a Kirkland product right next to that, 40% cheaper. I mean, you know that, like, once you buy it and you wash your clothes, and if you don't feel the difference, you're never buying back the Kimberly-Clark ever again.
But the thing about it is, I've oftentimes wondered if those basic name brands weren't made by these companies, like Kimberly-Clark. They make the off name, the house brand.
Sometimes you're talking about like pharmaceutical companies does that all the time. One company makes like a name brand as well as the generics. They can do that, but imagine how much money they would be losing. If let's say Kirkland product sells you for like $7 and Kimberly-Clark sells you for $10. Just definitely somebody is losing money if you're buying like Kirkland versus Kimberly-Clark.
But it also depends on, is the quality the same? Sometimes
Absolutely.
They might be using sometimes it might not be exactly the same. You do sometimes buy a name brand product that you've used for years and you like it because a lot of these others, maybe they're not exactly the same.
I'm not saying conclusively
Yeah.
that trend is going to go through. I'm just saying that trend is there.
Yeah.
And you don't, like bigger than ever before, I would say. I'm not saying that trend is going to
It amazes
continue.
me that trend is there bigger than ever before because all you see in handbags are things like, Coach and Louis Vuitton and Michael Kors and the handbag on, things on like clothing then people tend, I'm a crafter, so I'll go for the generic and do something to craft it up. But I see so many people with the name brand Kate Spade, So people so you're talking about clothing and stuff, people are more going for the name brand, but for things like laundry detergent, toilet paper and things there.
A brand used to be the biggest competitive advantage. They had the scale, they had the shelf space, they had the scale with the low cost production. They had it all, but it's not the same. The future is, in my view, future is not going to be extremely attractive as they used to be.
Yeah, so can I bring into the discussion Procter & Gamble, right? That's in the brand space. The latest news this week was Peltz, Scott Peltz.
Triumph Peltz, yeah.
I think he narrowly got into the board with the promise of shaking up, bringing more innovation. Well,
Yeah, true, but he was in General Electric too. He is in General Electric too. So you cannot just bandwagon on some hotshot investor. And that's not a sure shot.
Right.
And he lost 30% money on General Electric.
I was just looking at our notes here. In September 2013, General Electric was $24, had a 3% dividend. I don't know a lot about the new CEO, but he is finally taking action. He's going to cut, he's going to break things off, and if you have that money and you utilize that money correctly, again, it was sort of like the Microsoft thing. We had Mr. Ballmer there for 10 years, and
So a quick comment on your, at least the consumer habits, right? Like when I go to Amazon, I usually pick Amazon's choice because that's got the most common, most rating, the most, I guess, cheapest product, and that's the current trend at least, based on rating. It's no longer based on branding anymore.
Yeah, the term is called search cost. Like you go to a store, you don't know what to buy, you see something named product, you buy it. So they made it so easy for you. Now Amazon is making it so easy for you. Like the cheaper the product, the better the quality, a lot more people are liking it.
And the
Why
rating,
would you not?
And free shipping, yeah.
Why would you not? So that's the trend I'm seeing. I'm not saying I don't have any money on it, like long or short. I'm just saying you need to be wary of that. Like, if you're gonna buy into these product companies, 25 times earnings or something like that, and earnings growth is not gonna be there, at least in my view. So you need to have some sort of
So you won't
advantage.
put any money on PG right now?
No.
Okay.
Well, you are exactly right that Nelson he's a board member now, and he's been a large investor in a lot of companies, and some companies turned out really well, some companies not so much. But I'm really wary of activist investors. These guys never ran a business before. They just come in and they look at the finance statement and they say, what management is doing right. I know how to do this company. I'm just wary of that.
Right. Yeah.
Sometimes it can work. Sometimes they work on the financial engineering part. We'll borrow a lot of money, retire the stock goes up, and they're like, see you later. And then the guy's like, left with like a crappy company with a crappy balance sheet.
Okay, Maria, back to you. Is that it for you, or do you have any more?
The only other thing I was looking at some of these articles on things like FIFO, first in, first out, how this tax bill is going to change FIFO or LIFO or
Right.
and it's like it can get a little bit complex if you own like mutual funds or how you're going to have to do your
Absolutely.
taxes or.
I think that's going to have a nightmare effect, frankly. To me, the idea is that now they're messing the stock market plumbing and all that. This is not a good concept. I mean, changing the stock, what's going on and how people treat their reporting and all that, that's going to create confusion, for sure. I don't know, but I don't think the stock market likes confusion.
So you think it'll turn
That's
in?
my own opinion. I don't know. I'm just from my perspective.
So maybe it'll be a big nothing burger in the end.
Maybe.
How would FIFO change anything at all in terms of reporting for taxes?
Not very, for taxes, it changes everything.
Short
because
term to long term.
You can't sell the ones that you're losing money on and keep the ones that you made money on. The only time it wouldn't make a difference is if you sold all of the stock of any certain type that you had bought earlier.
I'm looking at FIFO versus wash sale that brokers do. The brokers firms would do either FIFO or wash sales that they do now. It does not make any difference within the period of a year, as he said that if you sell everything at the end of the year, which many people do. I do not know what the discussion is about FIFO. I mean, we understand the concept of FIFO, but would that really have such an impact on the market itself and people's behavior?
Well, I will say, you may not realize this, but a lot of the ETFs and all that, they focus on cost basis. It's a big advantage, and this could really knock them out. ETFs might have trouble. I don't know what you think, but everybody and his brother is doing ETFs, and they said, hey, wait a minute, we got to revisit all this stuff.
But don't they close their books at the end of the year, so it doesn't make any difference whether you did it in June, July, September, or December? At the end of the year, they do.
But instead, they might have a tax bill on it, but too bad, ETF, you got to pay.
So it'll be a temporary glitch, maybe reset, but over the years, it wouldn't make a difference. I'm asking a question, is there a really material difference?
Well, I think there'll be a lot less capital gains, sales, and the tax, they won't gather anywhere near much money.
See, that's the game plan, is that, because if we put in FIFO in there, we'll get more money up front, we'll lose out on the further end because people don't have those deep, low-cost, shares that they can sell on. So, well, we'll pack in a lot of cash up in our 10-year window, so that's what we were getting. That's the game plan. The stock market, who knows if the stock market plays along.
Do you actually know what the plan is, the proposed plan?
Now, I believe that's in the
Like,
Senate.
are they gonna make it like FIFO only? Is that what you're talking
I
That's
don't
about?
what
know.
they said.
I was
Yeah,
reading,
that's what
I was
I
reading
read.
Financial Times.
I
and
see.
they
I don't know
had,
the news, I'm just asking.
Financial
Now,
Times
that
said-
is
That's what
that
I
is the
read.
game plan, is the Senate. Yeah,
So
we
basically
need
they're gonna,
money.
like-
We need money in our plan to keep the debt down from the 1.5 trillion boost in debt has been approved. And that's the maximum, so they need money in early to keep that below 1.5 trillion.
And like Gary says, it's gonna be exchange traded funds or and all that. I was reading the Financial Times yesterday, had
Yeah.
something on this, but
Yeah,
I
so
don't
I think
quite
a lot of
understand.
So based on what they're talking about, the proposed like FIFO, right? It's gonna eliminate your ability to pick and choose which slab of the stock that you bought you wanna sell.
Right, just like,
That's the only difference.
Just like the wash sale is now.
No, wash sale is
Wash sale is not related to that?
wash sale is totally different. Yeah, wash sale is something that you buy now
And then you
and sell it within 90 days. And then you buy it within that time frame, and then you claim one of that as loss, and you keep the low cost.
But what you're changing is FIFO, LIFO, which is last in, first out, and tax lot selection.
specific
And
identity.
tax laws.
So basically they're eliminating-
Manipulate your earnings for your taxes.
But I mean,
Yeah.
I certainly would recommend everybody to Google those for your own purposes.
No.
Wash sale,
You wanna
FIFO,
have to control it slightly.
let's, the only thing I will say is that the plan is that it will bring money in early. That's the game plan. That's the thinking. Whether that will actually happen or not, it doesn't really matter. It's just that the plan is approved, to do it. I mean, if then debt goes way off, it kind of really matter once the thing is in there.
There's
Yeah.
ways
Yeah.
around
Yeah.
that problem. There's ways around the problem. You could form your own separate investing LLC or something like that. And then if you want to buy one or sell one short term versus keeping your long term in a separate account and a separate organization structure.
In case, is that it for you, Maria?
That's it.
Michael, you're
Interesting.
next.
Anyways, I guess if the budget passes, which I doubt that it would get through the Senate, but if it does, then some of those things, I guess we'll deal
Yeah,
with it.
it will be, it's opening up a can of worms.
At the moment, the way I have it now, and we'll learn more in time.
Right. I mean,
That
it's- you have to be
over the period of
quiet.
time does not make any difference. But I need to know if it does, then exactly how. But okay, so that's enough for that discussion. Tom Lee, who is a very well respected analyst on the Wall Street.
Okay,
Tom Lee's
what was
his
the guy's name?
Tom Lee.
Tom Lee.
The reason I personally like him is because he does not exaggerate on either side. He presents facts and tries to add value to a conversation rather than make claims of what's going to happen. He made a statement a couple of days ago, and I'm sure there's a paper to go with it too because it's a researcher. He says the next big revolution is Bitcoin-like things. So I thought that was startling. That affects me more than FIFO does. That he says next big revolution is Bitcoin-like products. So he firmly believes in that. He says it's going to actually revolutionize, like internet did, the way we conduct business and handle money.
We'll make
Because-
money on that.
As some of you may have a little dot in your head that really biggest market in the world is foreign exchange. Forex is bigger than stocks or bonds are, and according to him, that's where the ground will shake a little, and that will have impact on everything else. But anyways, just a general statement that he made. Since I respect the person, doesn't make too many exaggerated claims about anything. He made that statement. Okay, so that's what Tom Lee. So I'm sure that makes you happy, or sad. I don't know. But what a phenomenon! But it's good. Hey, I'm really truly thinking back about the internet days. Those of you who've been around for a while, there was no internet, no computers, and then all of a sudden they were, and they were early doubters. What would this PC do for me? That kind of thing. And now here we are, my God, what a stupid question. So,
Well, what kind of play would you make for these Bitcoin-like things?
See, it's going to impact the way that money flows around the world. So the foreign exchange, forex is really.
So what do you do to make money on this?
He's asking the companies, and
Yeah.
Tom share that.
We should ask Tom Lee. I do not have access to him, but I thought the statement itself was
I
powerful.
want to make money.
Yeah. Well, make money. You just go crazy over Bitcoin.
There is an ETF that I was going to mention yesterday. I found out about it.
Right.
SKY is one of them. SKYY.
But they, they didn't have all Bitcoins. They had a little bit of Bitcoin and a lot of other stuff.
But they're into the mix of the
SKYY.
companies that are in that spec.
What was it?
SKYY.
SKYY, I believe, is the name of,
SKYY.
and not directly on that. But it's not sure. It's this one. It's not this one. It doesn't come up, unfortunately. Here, but,
Okay.
Yeah, it's the first trust exchange traded fund.
yeah.
Huh.
I'll get it later because it's
Okay, so it's not as
Yeah.
okay, but it's
But a related comment to that is also, as you guys may have heard, that Bitcoin will be traded on the futures market.
right.
CME
And I
has made
sent
a
out
decision to do that.
the award there that some of this, this interactive brokerage poncho.
Yeah.
I mean, let's face it, he had it right. If they're relying on people to lend out Bitcoin or whatnot, so it can be shorted. I mean, that's what shorts do. They have to borrow it from somebody else.
So those are
It creates that tremendous. So the shorts fail. See, if they're short, they're getting short coins, Bitcoin, so they borrow it from, say, somebody out in Moscow or St. Petersburg. Said, "All right, I want to sell that. You short out this Bitcoin is so expensive." They short it. They borrow it, from the guys here in Moscow. And then suddenly Putin gives them a call and said, "Hey, wait a minute. It's time for you to pull a plug on these things and call in the Bitcoin that you lent out or go bust." They had shorted it and said, "Hey, too bad, so sad. We're pulling that Bitcoin back." And says, "Wait a minute, they've got to make good on that, and there is no Bitcoin available." And that's when the whole thing comes unglued. That's when you have a financial crisis. Yeah, that's what this interactive brokerage guy, this Peter Fly, his name, his name is Peter Fly. I think he might know.
The Financial Times had 2 articles yesterday.
Yeah,
in
Google
the
his,
derivative
what he observed about it. Extreme vulnerability when they do, that's when you have a future settlement.
It'd be cash. It'd be cash product.
Yeah,
Like commodities are not, and
right. When they do, there's a term for that, but it's where the clearinghouse. And that clearinghouse relies on everybody's word to be good. And it's not a good idea to rely on the word of somebody over in Russia. I've got news for you. That is not a good plan.
yeah, but in his case, CME's, I guess CIO was being interviewed, and he made a couple of statements, and the reporter was, where are the assets? How would you back it up? Where are the regulations?
Right.
All those kinds of things, like as if it was a stock,
Yeah.
as if it was GE. But his point was, CME person's point was, none of the stuff matters. It's just people just play with each other. This is it. That's what they're doing. That, hey, there's interest in it. There are people who want to go long. There are people who want to go short. That's market.
Yeah.
It doesn't. The rest of the stuff doesn't matter. That was his approach. He didn't say that, but that was his
It's
approach.
a new slot machine in the casino.
This is it.
See,
Those who have the urge to do it, do it.
It was only those things. I mean, you wouldn't be able to pledge something else to say,
Right.
all right, I want to short this. I'll pledge these other assets so I can borrow the Bitcoin and then to short it because it's so high priced. Well, that's where the vulnerability comes in.
Okay, so
These other assets are being pulled into that.
Very true.
No,
Very true.
That's just.
we'll see what happens next month when it actually
Well, I mean, that
becomes available.
if you do allow the clearinghouse and how they restrict it, if it's only in the Bitcoin world. I mean, I guess you could Bitcoin against some other Ethereum or all that. I guess. That's
Well,
something can be shorted.
and again, what that Mr. Lee is talking about, and I keep saying, I mean, we talk about Bitcoin, the concept, the commercial transaction is blockchain. And again, it's peer-to-peer, and we don't have that. I mean, we talked about it a little bit last week. We talked about algorithms, and Rick brought up they're trying to break that, but that's the deal with all of this. It's financially movement of resources, commerce is blockchain, and it's peer-to-peer, and that's what you got to think about. Bitcoin is a part of that, but that's maybe that's an investment, gambling, whatever.
Right.
But the concept in the future, 15, maybe 10 years from now, of using blockchains peer-to-peer,
Right.
that's what I think Mr. Lee's talking about. The only thing that's going to slow that down are the banks, the attorneys, because they're going to lose a lot of action if I can just go with you and they're cut out of it.
Yeah. By the way, I'm getting some signals there from Tom saying, well, we got to move on to the stocks.
Okay, so stop. So enough of
I
that
knew you all were
discussion.
gonna be talking about Bitcoin.
Um,
Walking in.
I mean, unfortunately, I know nothing about it, so.
I know it.
We shouldn't be talking about cryptocurrencies in here. This is supposed to be about
I
stocks.
mean, that's certainly many
Okay.
like that.
Bitcoins are stocks.
It's repurposed
But anyways,
about investments.
But in any case, Michael, is that it for you?
if I'll just give you one name, I've been wanting to buy an insurance company, and many of these insurance companies are doing very well. But I bought Safety Insurance, SAFT. That's a pretty unique. Look at their performance over the years, and go long term.
Oh, SFT, Tango.
Yeah. Consistent performer, and it's a company that does very well over the period of years. Spend a lot of time comparing it to other insurance companies, and this one seems to have a very stable.
What kind of insurance they are in?
Truckers, commercial companies, those kinds of things. They're, if you read about it, they will talk about automobile insurance, but it's not auto like personal auto, it's truckers and other things that probably include aviation. But anyways, safety insurance over the period of time, what they're doing, what they have done, is pretty stable. This is it.
It's good, it's a good stuff.
So Gobi, you're next.
Yeah, I do have one idea, but I manage money for other people, so I have to come up with ideas. Just a quick question to the group. We all throw up like ideas one way or another and every week. How much of your long-term investment versus you trade in and out in general in the markets, like short-term, in terms of percentage of your, let's say, net worth in the stock market? I'm curious that how much of the portfolio is churning percentage basis.
I would say for me it would be 15% speculative kind of swing trading kind of thing, but might be less usual. This group 15%, which is not that much. But
so 85% or something.
80% or so is ETFs that are just hanging in there.
So not direct stocks, it's usually like funds or some sort of like,
ETFs
indirect
mostly,
funds.
there are maybe, I would say 6-7 different issues, stocks, that I would hold for 6 to 9 to 12 months or longer. I've had FireEye losing money for a couple of years now, I'll run as an example, but then at 50% of put selling.
Okay.
The only churning I do is I bought something that really went tanked. But that doesn't happen very often, so I'm mostly 100% wrong.
Okay, so usually the small, whatever the transaction that we do over time, like week by week or monthly, so it's a smaller percentage of the portfolio. My assumption is right.
Yeah, I think if you work a lot, I work a lot, I don't have any time to be doing this, you know what I mean?
Yeah.
It has to be the long-term cash, whatever, but I just don't have time to be looking at stocks every day.
Let's assume that is the case, and you probably invest 85-90% of the capital in a long-term way. Don't you think your energy is supposed to be spent a lot more on that 90% rather than the 10% jumping in and out of
Can I make a comment? So, since I only been doing this for maybe 3 years, and most beginning part, at least it has been more in and out. So now, I'm doing a lot more options, but it's generally within the same few companies I'm looking at. So even though I'm doing a lot more churning in the options world, because there's always expiration date, right? The longest I got is like 400 something days. That's probably not long term for you, right? It's over a little over a year. But in that scenario, I'm still studying about the same company, but the churning still happens.
I was just curious that let's say we have $100 in our pocket and we're gonna spend it and we're gonna put away $85-90 in something that we're not gonna even think critically about, and we spend our energy on 10-15% constantly churning. And
No, I think that's wrong. I think the 90%, I think very critically about it. I don't want to lose it.
that's
But I agree that it's a lot. You get a lot more, bang for the buck if you know exactly where you're putting your money at and research on individual ones, because that's why I make the most money. Essentially, it's like the few ones essentially like Nvidia that I make most money, Qualcomm, and of course Ovaltech, and then Intel, a few other ones, mostly in tech, because that's what I know. So I focus on AMD as well, right? So even though I'm churning through them, but I generally know them such that I can churn in them. It's not like I pick a random stock today, somebody pitch, and I'm going to churn in that. No, that generally doesn't work out too well if you don't know the company, right?
But you also about this group, as Bo said in his, you got to remember this audience you're selecting. Bo, in his words, said we thought the market was going to tank, and it went up for 6 straight years. So, you got to keep that in mind when you ask a survey. Because if you asked me about churning, I would say 0% of my portfolios.
No, which is probably good, because the money 90% you put away, it's probably went up in the last 6 years, which is a good thing. Well, I am more of a longer term investor. I don't really trade in and out. I rarely even buy and sell the same stock or company within a year, just to give you a perspective on that. So the company that I'm going to share is Liberty Ventures. It's called LVNTA. So this is predominantly a holding company, LV, V as in Victor. So this is a holding company. It holds stakes in other companies basically. Until last year, that's their predominant business. Basically, they own other companies like Charter and Liberty Broadband. That's their most of the net asset value comes from. So last year, or early this year, they announced a deal to buy a largest internet cable company, including mobile company in Alaska, largest company, mobile broadband company in Alaska. And now the company is gonna completely change from holding company to an operating company. So the company is run by Liberty Group, which is controlled by John Malone. And this is a very, very interesting opportunity. If you just take all the holdings that they have and then add it up together and then divide it by the number of shares outstanding, you get 20% discount.
Not dividend, huh?
No, they won't give you a dividend. Dividends is the inefficient way of giving the money back to the shareholders. Because they pay you dividend and you have to pay tax on that. It's just they're based on your tax rate. It's very, very inefficient, which they won't do. Malone is very, very notoriously known for not leaking out anything unnecessarily. So basically, this is a company who owns other company stocks, and this is just trading for discount of what the company owns, without even including what the merger is going to. When the merger is going to go through, they have a lot of NOLs, net operating loss carry forwards, and they don't pay tax for a few years. So it's going to be one hell of a company if you have a time horizon of 3 or 5 years, what they can accomplish. And you can come up with so many scenarios, optimistic, pessimistic. And I'd be surprised if the NAV doesn't grow 3 or 5 years from now. I'd be surprised if the discount between the NAV and the stock price doesn't close.
This is a pretty young company, right? November.
Say again?
Pretty young company from 2016. It doesn't. But I can't it doesn't.
That doesn't. Yeah. Google Finance doesn't give you the display. Basically, the company stock ticker changed a few times.
Okay, gotcha.
because they constantly go through like buying companies and selling off pieces and then they merge with other companies and things like that. The entity's been out there for like 20 years or so, one way or another. Usually starts with the Liberty, and this is very interesting. But I wouldn't know what the stock's gonna do tomorrow, next month, even next year. I'm hoping that the stock goes down so Malone can buy a lot more. I can buy a lot more. So, as a long-term investor, you're bringing something so much to the table that you don't care what the stock price is going to do as long as the business does well. So actually, you wish the stock price goes down so you can buy a lot more. At the end day, whenever that is, it will be worth a lot more. They control a lot more
Same
business.
exact phrase from Josh.
Say again?
I heard the same phrase from a value investor, Josh.
Sure, it's a business approach, right? Like we're not treating this as like a ticker bullet, like I can buy here and then sell it over here. I'm interested in the business itself. I'm interested in the management who runs the business for me as an owner. When I buy a stock, I'm a part owner in the business. I care more about the business, what they did. I don't care much about who's the guy selling the stock to me or who's the guy selling the stock to somebody else. I care about the business, I care about the management, who's going to work for me, and are they incentivized correctly to run the values for me. Those are very important, especially large percentage of our portfolios are longer term in nature. We should put.
Can I ask you, as a long-term value investor, do you sometimes hedge in particular, let's say if a stock that carries options with it, you sell calls against it once in a while depending on the weather?
No, hedging is,
Okay.
no, I don't use hedge. Hedging is a tool that can be used, but generally I don't. Because hedge brings an element as a cost to run that portfolio, whatever that is. And that's for sure, you're gonna lose that cost over a longer term. You're gonna own this company for a few years anyway, so why would you wanna spend more money to carry that option or derivative, any kind of derivative in that deal?
Yeah, and as a person that manages some other people's money, are you allowed to use options for their portfolio?
I am allowed to use, yeah. I'm allowed to use, but I generally don't use.
Okay.
And option is a tool that I understand. I know the limitations of it.
Yep.
But very rare that I would come across a situation the attractiveness of the option is superior relative to if I just hold the company itself.
Yeah. So I know most of the accounts are, at least people asked to be managed, are retirement accounts. And in those accounts, generally, you are supposed to be risk avert, right? So, and I know options is considered risky, and therefore that's why I thought maybe if you manage people's account, there's a huge frowned upon.
Well, you know this full well that they're not. If used.
Not for personal, I'm talking about fund managers. Right?
No, even there, because if you sell a call against stock, it's a conservative strategy.
Yeah. So it's so weird. Yeah, Hector is exactly right. So you could be like a novice investor with a $50,000 portfolio. You can have a covered call strategy covered for you.
Yeah, I'm not talking about an individual investor. I'm talking about managers, like our managers.
Manager has much more leverage than an individual customer because they consider that manager is a guy who knows what he's doing. Yeah. So he's allowed to do whatever he advertises he's going to do.
Yeah. I just thought that you will be like a management nightmare because you have so many different type of portfolio you're managing, and you're not going to trade one and have apply to every single portfolio. If one guy be like, I don't want to have options, so if you trade one, that guy's going to be you have to single-handedly not have that position for him, right? So I just thought that it's like a management nightmare. So it can be potential.
It could be, but that's not the reason I'm not using it.
Okay. Yeah, I just thought that.
That's a tool just like you can own a stock or you can own an option of leverage with the leverage, right?
Yep.
And it can work out, but I'm much more of a conservative investor, and options, any derivative for that reason, comes with a timeline attached.
Yeah.
Like time is a wonderful thing. You need to work. Time should work for you. You shouldn't work within a time scale to reduce your opportunity set. I believe in time needs to be in our favor to the market vagaries to work for you.
Time has a problem. It only goes one way.
Yeah. it dies down.
Well, that's why some people will argue because of exactly what you said. You don't buy the option, you sell the option.
True.
Because you lose that premium over time.
True. But again, you always need to consider that. Is that the best thing to do?
Right, but I've got bitten by selling option and the stock goes through the roof and I lost the opportunity for upside.
Because if you read the research papers of how the wealth has been created in the last 100 years or whatever, less than 20% of the companies ever listed created all the wealth in the publicly traded company. 80% of the companies pretty much they just went for a ride.
Yeah.
So you're gonna have to hope that you're gonna own few percentage of those 20% companies in your portfolio, and if you don't know that beforehand because the future is never certain. But you can predict that, you can put the odds in your favor if you're looking for that type of opportunities over time.
This does bring up a point I wouldn't want to project to the group is that, Saudi Arabia is having an experience over there.
Yeah.
Where so a lot of long-term investors over there who, invested, have pretty been successful over the years. Have run afoul of football over there. And they're going to be forced to pay, it's basically a shakedown of the guys. And I think they're mighty sorry about making those long-term investments, even though they were good. Because it's now...
Well, actually, there are a few people looking into Saudi Arabia already. I spoke about a gentleman who controls the equity residential.
But they made a lot of long-term investments, and they've been exposed. That was a mistake. They should have had a very short terms that could be hidden. That is where you have a problem with the economy, is that if you can maintain the long-term focus, then go stocks all the way. That's fantastic. Your danger is, this shift in the power structure. And so we want that, those benefits.
Yeah.
If you could have hidden them, we wouldn't have known about it. So we couldn't get it from you. But because they're exposed in the long term, they're vulnerable.
Oh, absolutely. You can always pick a duration or time stamp in the history. You could say why this is not the time to buy stocks, or why this is not an area you should buy stocks. And over a long period of time, you're going to be more wrong than right. Usually, because obviously I'm not suggesting anybody to go put 100% in Saudi Arabia. You can always come up with a scenario. I have lost money in a company that I invested in Russia. The government took over the company pretty much. I can talk about that if you want, but would I make that bet again? I would make that bet again because the opportunity was unbelievable that you're willing to bet in some cases, losing portion of your portfolio for the upside of it. That's called
No, you're absolutely right. The long, and it's been true in the U.S. for sure. That
all over the world.
Never bet against the U.S. in the long term. That's always been true in the past. That will be in the future.
Well, yeah, past gives you enough ideas to make up your mind.
Let's go on.
Okay.
You want the next person?
Okay,
yeah.
Your idea. Did you say
Is
you
that
have
it?
idea that you want?
Yeah.
Oh, that's the Liberty Ventures I talked
okay,
about.
yeah.
Okay. So is that it then for
Yeah,
you?
sure.
Don, you're next.
I looked and looked, but I didn't find anything I liked. So, next person.
Well, okay, Nolan, you're next.
All right, ladies and gentlemen, we have a stock. I like to, me, I'll mention the stock for a few months based upon its momentum and its growth. And I've mentioned this before, and I hope that people have invested in it. This is LGN Technology is one of my winners.
Just A?
Yeah, it's really doing well. Now, I would hope that people would look at the chart.
To spell it out, Edgeline?
No, it's
Just
just, the ticker is A.
It's
Agilent. Agilent.
Yeah, but they won't take it.
There you are.
Okay, so LGN Technology, this is a really,
I think it's Agilent.
sorry, I'm sorry. It's early in
It's
the morning.
okay. I'm not mispronouncing myself.
Okay,
I had to know that.
so we'll say ticker A, because I'm having problems reaching the thing. This particular company came through a recommendation, and I didn't want to say that, but I'll say that now, because the price pattern is definitely showing consistent upward movement. And this is a stock that's going to continue to rise for quite a while because of what they're doing. Now they're not just in technology, but they're in the sort of genome study. as well as the biometrics study. So there's a lot of this growth and merger between technology that's going to use biometrics, that's going to use genome technology. Who knows, we have a fingerprint scanner today, but we may have a genetic scanner to open up our computer as things get more advanced. So this company has attracted a lot of attention from speculative venture capitalists, hedge funds, and the reason why this company was put on my radar was from a friend who lives in Santa Clara. So the origin of the company.
Some inside info.
Yeah, it's Santa Clara, California, where my mom was right down the street. Well, right around the corner from San Jose, which my mom was in Silicon Valley.
Listen to Noah's mom.
You talked about Western Digital not too long ago. I remember.
Yeah, well, this is something that, like I said, since now remember I mentioned this in September. So if we can look at the chart from when I mentioned it, and I understand when I mentioned it in September there was a correction occurring. So like right before the dip, you see, right after September there was a dip, and I understand that people were concerned about that, and I was too, but I didn't sell, and that's where my money was made. After that dip, I purchased a few more shares and I just rolled it.
Only $2 down.
Yeah, well, but
60, 64.
I know at that time that I presented it was curving.
Yeah.
So it probably prevented people from investing in it. But now we're doing good. So I'm just giving you an opportunity to say that it really doesn't matter if you're a long-term investor, but this is definitely a company that you want to keep your eye on. This is something that's moving similar to NVIDIA that's getting that momentum because they're in a very niche industry.
Would you wait for a dip?
Well, it depends on what your trading pattern is.
Oh.
If you're going to do for a year, then I would wait for another pullback. But if you're going to do it for 10 years, buy it today.
Right.
Yeah.
Because this is up 65% in 2017.
Yeah.
Yeah, 65%.
Yeah,
It's up a lot.
Correct. Yeah. It's still low.
I also mentioned about the Agilent alongside with the Keysights. That's KEYS. They essentially Keysights branched out from Agilent 2014, I think. And of course, now Agilent used to sell the oscilloscopes and different hardware, do signal processing stuff. And now they are more focusing on the big data round. And with the life science and of course like genome analysis and material analysis. So that's their industry now. But then this KEYS,
So
KEYS.
KEYS.
Yeah, so I remember I mentioned it together with Agilent. I think it was a little bit after.
You mentioned it about a week after he mentioned it.
Yeah. Okay. Yeah. Okay.
There you go.
Yeah, same day.
Oh,
in September, same day. Yeah.
Yep.
Yeah.
So they sell the physical hardwares while Agilent do the heavy lifting, if you will. Yeah. So that's another one to look at alongside with Agilent.
What's the market cap on this? 8 billion.
So I have another stock for everyone. This stock is speculative. So I would put a large emphasis on the ticker. This is Ring Central. RNG. R is Rick.
You got
And NG. Sorry.
Ring Central.
So Ring Central, this company is it's actually trading under book from some analysis that's been given, but the reason why I like this company is because we're seeing a higher rally in the housing industry. I read an article recently. What attracted me to the stock was because at least 3 months ago I heard that millennials are now starting to buy homes. That's kind of shocking, but considering that millennials are not really into that, but it was reported by a reputable news source, who I think it was Williams Roberts, said that they're starting to purchase. Not a lot of millennials. So I decided to try to get into the housing industry. This is a stock that kind of works with the builders a bit, but I like the fact that it's well managed. And again, when I purchased it, it wasn't at a 52-week high, but now it is at a 52-week high. It's a speculative trade, which means that I may be in and out of this depending on the performance of the stock, and I don't have very many shares. So I don't want to read the description of the stock. I do encourage you to look into it. And It's reasonably priced, which means that it won't hurt the wallet. You guys can get in and get out without, trying to the tax.
Institutional ownership is 103%. I wonder what that means.
It's a wrong metric, probably.
Must be, yeah.
How is that possible?
I don't know. I just noticed myself. What does that mean?
Noel, what do you think of Home Depot then?
I like Home Depot for years. I've always liked it.
But I mean, now if the millennials are entering the
Yeah, I picked this company because it's smaller and it's a growth stock. I try to stay away from the larger cap companies. This is only an $8 billion company, that's why it's speculative. It's easier.
More growth potential.
Yeah.
So is that it for
3%
now?
of the stock is 3%.
Rick?
Okay, I have two new names in my holdings, but since time is kind of getting away from us, I'm just gonna talk about one, which is less well known than the other. The one I'm gonna talk about is Chimera Investment Corporation, CIM. This was somewhat obscure to me. In fact, I'm not sure. Yeah, I'm not sure I ever heard of it before. I stumbled across. Yeah,
Wow.
yeah, that's that's the most obvious highlight. It's a mortgage rate.
BT yield.
Go back long term chart. It's gonna be fun.
Yeah, it's kind of.
Or does that go back to 2008?
Well, the 10-year goes, 2008, and then way down there. You go to 5-year, it's 5-year. You have a dip here in 2015, a low there of $11. $11 in late 2015. February 2016.
All right, this is speculative.
Oh, that was directly there, I think.
That's right. It sure is.
But although mortgage REITs are I think, a risky corner of the market,
Yeah.
I can't find anything wrong with this particular company. The 52-week price performance is up 11.84%. The dividend, as you can see, is.
Why did you choose this?
Well, because of the factors that I'm talking about here. The dividend is paid quarterly. They paid a special dividend last year. The dividend payout ratio is 62%. That's pretty reasonable.
Yeah.
Beta is given as 0.31.
Rick, you said you can't find anything wrong with it. What's wrong with it is the chart. I mean, what I'm saying is, what's wrong is the behavior of the stock, of the price of the stock. There's something wrong that doesn't meet the eye when it comes to looking at data, but just the behavior of the stock itself raises a red flag.
Okay, could be.
I mean, everybody's got their own way of thinking. Who knows? All you know is everybody doesn't. Nobody knows it all, for sure.
And do you want to throw out the other ticker?
Yeah,
Rick?
what's the other symbol?
Just throw the ticker out.
Main Street Capital, MAIN, a business development corporation.
Main Street Capital. I heard.
That has its own character.
Isn't there one like right outside here?
Right, now that one has so that's only a 5% yield, huh?
Yeah, just 5.5%. Terrible.
Right. Yeah, I mean, everybody's got their own ways of thinking, and business development corporations have, they have their own character, and they operate in a certain way within the more sort of the shadow banking operation, if you will. I don't know anything about Main Street, but the Business Development Corporation, you need to be aware of how they operate called BDCs. So they have their own nature.
Well, there is risk involved with both of these, but
Yeah, but
there's also
everybody's got their
more.
own way of thinking.
So we'll see how it plays out.
Absolutely. That's right. So is that it then for your record?
Yes.
All right, Katie, you're next.
Okay, so two stocks that I have purchased in the last week or so. There's P, Pandora.
Look at your shirt. Go be approved with his shirt.
Pandora. Write that down.
Yeah, I pronounced that one. It's just
People
Pandora.
can believe that that's true.
Oh yeah, I mean his shirt says Pandora.
I heard about this or learned about this. I just had a conversation with somebody who was mentioning that apparently Sirius Radio, Sirius XM Radio has like an investment in them. They keep on throwing money at them. They're trying to buy them. They weren't, from my understanding, not successful in trying to acquire them.
Right.
But they do have two people on the board. And from the conversation that I was having with it first, apparently the two people on the board are trying to like push down the stock price in order to make that acquisition happen. So anyway, so that was a conversation that I had about a week ago, and then I got in at $4.55, and it's gone up.
Wow.
Yeah.
They picked it up right there at the bottom.
I was happy with that, and then
I need to
there's
call you when you pick up.
oh,
Very nice.
and then Square is the other one, SQ.
Oh, yeah. Wow.
That's a monster.
What was it?
That's doubled.
Square.
That's
Well,
what
yes.
Yeah, they talk about the Bitcoins. That's why.
this Google machine doesn't work as well as I thought.
That's
The third one. The third one.
I know it is, but Google is not
Third
that
one
smart.
down. No.
It's
Third
still
one.
the third one down.
It was there. Third
Oh,
one
it was
down.
there? Okay.
It was there.
It's still there.
Oh, it's way down there. I don't know
No,
why
it's
Google,
Q though.
I don't know why Google doesn't pick at the first one. It's the most
Yeah, I think
popular.
we need a new platform.
Google is not very smart.
I want to buy this one, but it's
No,
keeps going up.
think they stopped maintaining it.
So and now they're accepting like crypto Bitcoin.
Yeah.
So that
Katie, you
800
always,
pound gorilla.
Something about crypto stock
Katie, you like IPOs. There was one in the Post today. It was a woman who started it. Did you look at that one? I can't. It's in the business section of the Post. And Sam, there were two articles on Tesla on the Post
Oh, really?
about their speediest car and
They have
a larger
two cars
vehicle.
coming.
Yeah, but this lady took a company public this week, and I know you like IPOs, so I thought.
I hadn't read up about that. Is that what? Do you recall the name of it?
I don't, but if somebody can go online to the Post, today's Post, I'm sure it'll be there in the business section, and the articles on Tesla.
Something
Oh, yeah.
about Square. Those gentlemen who used to be with our group, I don't know if you remember. Tall.
They were Square.
He had glasses. I don't know more qualities about it, but he mentioned Square with us. I think like $8 a share.
Wow.
So we had an opportunity to get in that. I think we missed that opportunity, gentlemen. I just want to say that.
But it should.
But something I will say is that if you look at the recent PayPal update, if anyone has a new phone or whatever,
Yeah.
I think that PayPal is going to follow Square in the crypto world. Because if you look at their interface, they're accepting QR codes.
You're talking PYPL?
No,
Yeah,
their interface is now
The ticker,
And PayPal
Yes.
Yeah.
PayPal's
is a bigger company.
updated, newest update, they're now accepting QR codes for peer-to-peer transfers. Now, if anyone knows anything about QR codes, that is the essence of crypto. So the fact that they're integrating that in their UI, putting their patents behind that design structure, means that on the monetary side, utilizing QR codes is a simple integration in order to integrate with crypto.
How does Square monetize integration with Bitcoin and ability to further put out I mean, they got a piece of the action.
Can you pull up the Wall Street?
Do a big transaction.
Well, I mean, anyone who's been in the Bitcoin area will tell you that people who are accepting Bitcoin are actually fractionally collecting Bitcoin. So just look at Square as being now sort of a Bitcoin collector, which would immensely raise the market cap.
Yeah.
Because they're getting fractional amounts of Bitcoin for each one of the transactions. They're not even
So
dealing
those who
in USD.
think it's speculative, and it's quite a lot more speculative, I see Gobi kind of going sideways.
No, because like last week somebody alluded to the similar point. Basically, my collection. So when you say you buy something from me, and
It's Kathy Lee.
you think that I'm taking the Bitcoin. No, I'm just transferring it to the exchange and somebody else owns it. It's not necessarily like, I don't even think Square or companies, they can hold on because they are inherently running the risk of like, what is it going to be worth tomorrow. It's not like a typical currency.
It depends on the valuation of the day.
Yeah, so they're not going to run that risk.
Katie, that company is called Stitch Fix, and the lady is Kathy Lake.
Okay, thank you.
That makes clear sense.
So, do you think that PayPal would be a good way to play it now?
That's hard to say.
Yeah, there's articles if you go on to Robinhood, and it'll click on, forget about Bitcoin, PayPal. There have been these teasers on Robinhood for a while when I've gone and looked at different tickers. So this has been about a month that they've been pushing PayPal as an option to Bitcoin. And what you're talking about, I guess, is what they're talking about.
You mean as an alternative?
Okay,
Yeah.
is that okay? Okay, there and by the window, and you turn back there.
So I don't know if I should say too much because I basically just do cryptos now. So I'll just leave it at that. I have a 401k and I'm indexed, so I just wanted to get some I come here to get insight into what I should be doing with that.
Yeah, that's exactly what we want. Everybody.
Well, what are your
We talk
thoughts?
about crypto.
What are your thoughts on PayPal then with this idea with crypto?
Well, so I've been burned by Bitcoin in the past, and the business is now tied to Bitcoin, and the Bitcoin crashes, the business is not. You're going to see it's a big risk. It makes the stock riskier.
Okay.
In my opinion, I've been looking at Bitcoin for many years, and it's the last, I would say, actually this year, we started to see patterns emerge in the price and the action, which is something I've never seen before in Bitcoin. It's always just been like this. So, people who know what they're doing are finally getting in. So I think there's risks and there's benefits. So I've been swing trading Bitcoin, and I bought in at the crash last weekend, and I took some profits around the 7,400 level and 7,700 now. So I've done pretty well, and I'm long and swing on Bitcoin.
By the way, have you ever mined a Bitcoin?
No, I've never mined Bitcoin. I don't want to pay that electric bill or get the hardware or anything.
I think we had a guy here that had done some mining years ago, and then now he gave up his.
I thought about it many years ago, and I should have done it. I should have bought Bitcoin when I wanted to, which was when it was a price of a cup of coffee when I was in college.
Boy, they were giving them away.
But yeah, seriously, it was. But there's a lot of other opportunities with alternative cryptocurrencies right now, and in many ways they're superior to Bitcoin. So a lot of people just kind of shrug off altcoins because they think that there's nothing to it.
Are there any companies though, like a PayPal and Square they mentioned, that you follow that are in that area? Out of cryptocurrency but are supported by
Square.
By the way, Coinbase, I believe, is an outfit that they handle Bitcoins. Basically they gotta get a cut, which is the ideal business, I'm saying. Just get a cut from all the flows.
But the Coinbase, I don't think is a stock.
No, it's a bank.
It's an exchange.
Yeah,
so that's where you buy the Bitcoin.
But they're in the sweet spot. They're getting a cut.
Oh yeah, if they become a public company, I would definitely invest in Coinbase. I mean, I would be very interested in an IPO in Coinbase.
It's a mortgage.
So just be on the lookout for that. If they come out as public, You know, it could be good. Square, I like Square, what they're doing. And if PayPal gets in more with it, I will look at PayPal also.
Are there other companies that you're thinking of?
Not really. So I don't understand companies too much. I don't like to invest in things I don't understand. And I mean, so when you guys read the like financial statements of companies, right, and you see all those numbers, how do you know if they're telling the truth?
Okay, so
Wait,
I don't want to play devil's advocate.
Then everybody else sees the
Hold
same
on.
thing.
Can I say something? I don't want to play devil's advocate. So you're not really into companies, and I understand why, because they can be complicated financial statements. But not understanding company, but then moving into crypto.
Yeah.
How do you make that jump?
I think it's technical charting way. That's what it's
let
doing.
him answer.
It's pure speculation. Man.
Okay.
I have no idea. I don't think anyone does. There's a lot.
Buy
I
low,
don't
sell
know.
high.
I can't answer that.
And as a caveat, I'm actually in crypto myself. I just said that, so hopefully you can bridge the gap for people who are into stocks.
So here's my philosophy on why companies, I like cryptos. I've been working in technology for around 10, I've been coding for 10 years and I work in technology. And a lot of the crypto tech is open source, which means that you can read the code. Most people can't read code, but I can. So for me, I can't read numbers. I can read numbers, but how do I know they're real? Whereas if the source code's there and that's in the technology that I'm using, I feel more comfortable investing in something like that.
Can I ask you something? What do you think about
Have
you heard of the terminology Web X.0?
No.
Okay, because to the point of John's question here about what other companies are. This is the name of an ETF that deals, and it says here with Web X.0 somewhere here. You know, this right there. The theme of Web, and they include Bitcoin Investment Trust. This ETF has a 5.98% investment in Bitcoin. And then they lump Nvidia, which is involved in Bitcoin in some way. But then they throw in Amazon and Twitter and Tesla and blah, blah. VIX. I wonder what the WebX, I'll have to do some more research on this, but they throw in Bitcoin to John's question about what other related companies we have in Bitcoin. They don't mention PayPal Square here, but
Nvidia is not.
So actually,
I thought there was part of the chips that involved in the blockchain.
No, they're not involved. They're not involved. I really want to make that.
Okay.
Hector,
What's
can you
that?
give the
Nvidia's
symbol of
not
this
involved?
this ETF or whatever?
It's ARKW.
ARKW.
What is that? I guess that was one you think about Sky.
And this is nothing but up, the last year. All the way right up,
Did you get it?
also keep in mind that what's cool is I didn't know so many companies were getting into Bitcoin. It's actually really interesting.
What's the ticker on that?
ARKW.
It'll bring more stability to Bitcoin because the stock market is way
ARKW.
more stable than the cryptocurrency market.
Right.
So
Well, this is open source code. What is preventing, there's something like 8 or 10 different coins are floating around.
Well, hundreds.
If these are open code, what is the restriction of just Bitcoin? People are gonna come out with all kinds of alternatives.
So there's one of the risks. The fact that there are communities of developers that read the code makes me more comfortable than investing in a company where I can't see the code and I don't know what they're doing. Because there's many cases where technology companies have.
It's not only companies, there's a kid down our street who's mining for Bitcoin with his own computer.
That's
And
pretty
he's
cool.
already hit a couple of them.
He's gotten a couple of Bitcoins, is that right?
It goes right back to investing on what you know, right? So you know Bitcoin, so you invest in that. That's understandable. So the technology, at least.
High school kid.
Like for example, like for Apple, right? Like Apple's a great company and a great stock over the long term. But like when you buy a phone, you don't really know what's they put in here.
But see, what you have open source.
Not with this. You can't. I can't. I don't really know what's in here.
Crypto.
Is that Android or is that iOS?
Android.
Which is a Linux based.
Yeah, but what if Google's putting stuff in there that I don't want in there? What if
Yeah, so here's the thing, right? Like Bitcoin is
my
essentially it's a currency, and you're trading like euro and this exchange rate for the US dollar, right? That's essentially what it's going to do. It doesn't produce any value on its own, but it can be attributed to a company that's going to produce good. So at the end of the day, the money has to flow through a certain system. That system usually it's a company or some entity that can generate goods. And a company, you can look at it generates revenue, there's a profit margin, and they has expenses, and they left whatever net income, right? And then that's how much per share that each person is going to get, and then you're investing in that net income. How do you know they're lying about it? You don't. That's all publicly available. If everybody's seeing what's publicly available, everybody's going to invest in the same manner. If it's a cheap company, in everybody's eye, it's a cheap company, right? So it's the same thing. Like crypto could be, right now it's cheap. Who dictates that, right?
Well, with the company, you can verify whether the numbers are true or not. There is an external auditor who reviews those and authorizes that, yes, I reviewed it.
Yeah, so frauds can happen, but everybody's going to be looking at the same fraud. So, yeah, that's essentially
Yeah, and it'll be public knowledge. I mean, everyone that's using the tech will know that there's things wrong with it.
Is that it for you? Because we're getting right down to the wire. So is that?
That's pretty much it. I'll keep you guys updated. I'll keep coming back and.
Okay. Yeah.
But
that's good. That's good.
Keep enlightening people, but yeah, that's my thing.
Now the gentleman there by the clock.
Nothing.
You're nothing for you.
No.
Tom, then you're next.
I'll be short. There's just two quick things. Ring is interesting. I have that on my doorbell system already, and I've been watching it. I have a good thing and a bad thing to say about that. The good thing is that they are coming out with a lot of new products, coming out with new products which look very interesting, and it has a appeal for more and more people as they move along. From my personal experience on my system, I have problems because every time my network goes down, so does the Ring. And I have to reboot and install the password again. The other problem I have is it's battery operated, and it's a bear to change the battery. Okay, go on to the next thing. Square. I'm like that guy over there who writes covered calls, and I had some Square, and I still have it, but I wrote some covered calls on it, and I missed the nice pop-up. So sometimes doing covered calls is not the best thing.
The upside risk, yeah.
That's all.
All right, Dan, you're next.
But you had a good sleep the night before, though. Sorry, go ahead.
I'm still watching TRT, haven't bought it, but if you want to put it up, it went up again this week.
Right.
Like another 6% or so. I mean, I was waiting for a pullback, and it just doesn't.
Rio Tech.
Yeah, it just doesn't happen.
Don't wait.
Yeah, I know. Well, I mean, I have to figure out how to evaluate.
Tech related business. Yeah.
And then the other thing is just a tip for what it's worth. I was talking to somebody about gambling in Japan. The government wants to legalize it. I didn't know it was illegal in Japan, but there's a lot of people in Japan that like to gamble, so they probably just go to Macau. But the government wants to keep the money in-house. And so
cash.
Huh? Yeah, so that
government's really like cut.
If that happens, that'll be a big boom. And again, this is just scuttle, meaningless hearsay, but supposedly Las Vegas Sands has a inroad into that market. Again, take it for just hearsay. It's nothing confirmed, but something I'm going to watch anyway. And I think Las Vegas Sands is it's a good company. Anyway.
Do you think Win also is a play in there?
That I don't know. It's, if you were interested, I'd tell you how this conversation came about, but for the sake of time, that's it.
All right. Next, is this your wife?
No,
or
my
wife?
sister.
Oh, wow.
always got it wrong.
Gary always says wife.
I'm just here as a spectator, so.
I mean, well, I'm always happy to see women. That's because I'm so.
Wait a minute, you gotta be careful when you say that.
Yeah,
Gary,
you gotta be careful.
Gary, very quickly, that's what you say. Look what happened to us friends.
I'm an old fool, so don't worry.
That's what I've said. I mean,
All right, Wei, you're next.
All right, so I just want to talk about AMD today. So at least based off my valuation, I started to do more value investing since I shifted from speculation at least a year ago, since I met Josh and Gobi and a few other value investors. So if I just like do the cash flow and just the balance sheet and the financial statement, the company itself with just its asset right now, the book value is in pennies, just because they have a lot of liabilities and their revenue and their cash isn't that high. So I was looking at just based off that, it's like I think like 70 something cents or 60 something cents is the actual book value. But then if you look into the individual segment of the business, they are right now doing about 23% in profit margin. And then after subtracting like, you know, all the expenses and that, like they probably keep about 7%. But the company is talking about increasing that to about 31% profit margin by next year. So if you put that into consideration, assuming the trend of the expense aligns with what they've been doing in the historical past, so I of course, you know, try to do like some type of polyfit to project how much they're going to spend next year, and then I create a range essentially that says, assuming the company is going to make this much, and based off their projection, I see the price target for about between like $8 on the low end and 11 something like 11.40 something for the high end. So right now it's pretty much on the high end, assuming that, you know, everything goes in favor, and I'm using like 30 future price to earning ratio, just because that's about the middle ground of Nvidia and also Intel, right? Like, so yeah, so it's a little bit on the high side, but guess what? I'm selling contracts there, so I'm selling like 11, which has been doing pretty well, and my plan essentially is to keep selling it goes down to like 8.
You're selling puts.
I'm selling puts in there at 11 and 10.5. It keeps going down. I will own them, but my at least hope is that the company does do well as accordance to their guidance.
And because it has a beta of 2.49
yeah, the
times
volatility
S&P, you get good premium on that.
Yep,
put,
exactly.
Right?
The volatility is pretty high there.
And very liquid, $56 million shares a day.
So yeah, so that is something that at least it's not a long-term play, but I do believe long-term play is valuable, but you should be able to combine the two, right? If you know it's a good company, why not trade around it? You know you don't have to worry about too much on the downside. If it does go down, you own it. If it doesn't, you collect premium. So that's at least my philosophy. So you look at a long term of the business plan in addition to short term. So hybrid, right? Why not have both? So that's it. That's it for me.
Sam, you're next.
No, I've just been adding incrementally to Twitter. I think it's found the bottom. Should be going up. I think long term is going to be a $100 stock.
You're right there with Mark Cuban.
What?
You're right there with Mark.
Yeah.
Yeah.
Right there with Cuban. Other than that, just been adding to incrementally to Bitcoin and I like.
All right.
I want to add a couple of themes. The retail space, right? The retail space has been knocked around a lot, and normally this time of year for those swing traders, you saw Macy's, for instance, take a really big hit lately, but apparently they turned in a good quarter report, and into Christmas, the holidays, sorry, let me be correct. The Christmas holidays, you already see, I was in it, I sold some 20 puts that I made some good money on a couple of weeks ago. It still has some room to grow here toward the end. JWN is another one that got beaten down for you swing traders. Nordstrom. That's taken up, but that's supposed to do very well this Thanksgiving week. Not much on the downside risk. Another theme that came up is Tesla, right? With their truck, semi-truck. And here's a company that was Cummins. How many heard of Cummins? Cummins is a manufacturer of diesel engines and truck components. And on the news that Tesla came up with this electric semi-truck yesterday, Cummins took a real dive. On the very same day or day before that, Saks.com elevated Cummins to #1 rank for top performing stock. The next day, Tesla comes out and takes a dip, right? And what happens, so I read about this, buying opportunity. I mean, Tesla's going to take a while to deliver those trucks, A. B, it's going to take a while to people adopt it. But then I read that Walmart bought 15 of it. So, but when are they going to deliver? So there might be an overreaction here. Cummins was really touted by sort of analysts that are pretty well regarded. Yes, you'll have ultimately a dying industry, perhaps, the diesel engine, you think, with the electric vehicle coming up. But for the shorter term, sort of meaning a couple, 3 years, might still be a good story if you want to pick up on that.
Well, that article about those trucks, it's not till 2020. And who knows if they'll deliver in 2020.
And then unknown for their execution.
This is Tesla we're talking about
Right,
on those trucks.
right.
So Cummins could have a good 2.5 years before.
Right, and let me see, I'll keep that one real quick here. Let's see if we get the right one here. Yeah. So yeah, we're going right back to this one that is about the Bitcoin theme. I mentioned that earlier. Just to recap their holdings, and I don't see a theme here really. There is a theme here, but when you couple Amazon with Bitcoin, Nvidia, and Athena Health, I guess they're in the cloud, I suppose. And Netflix, Twitter, Tesla. If you want to diversify your risk and get into all these companies, you can get into that name, ARKW. Yeah, let me see. That's
What's
about all I
the
want to-
expense ratio on that ETF?
Right, that's
What's the
a good
expense on
question. The expense ratio is as follows.
Does it say?
Let's see.
It should be under a summary,
The
maybe?
profile.
Or a profile, yeah.
Yeah, right there. Where's it?
Maybe under summary.
Expense ratio right there.
Okay, point
Yeah, it's on the expensive side.
kind of.
But if you make 10%,
It's not crazy though.
Yeah,
It's not crazy.
less than a mutual fund, I heard.
Yeah.
There's no one out there, Gary. We're okay.
Well, so I guess you can see.
Yeah.
So, all right, I guess it's all open.
Before you log off, and this is for these folks on listening online about this group. I keep these books, and from this group, I know we share a lot of political and BS and all that, but things do come out of here. And in July of 2014, one of Noel's favorite companies, NVDA, was recommended to this group at guess what price? Want to take a guess?
$1.50.
$19.05. On September 14th, 2013, Amazon was recommended in this group. You want to take a guess? $287. On September 27th, 2014, OLED was recommended in this group.
Oh, man.
You want to take a guess?
20 something?
$33.51. Now, Noel, I think it's been 2 years or 3 years, was recommending Bitcoin at about $100 to $150, or maybe even less. Sam's friend Dan walked in here when we were in the small room downstairs, and I guess that's 5 years ago, and recommended Tesla at $88. So there are bits and pieces of things that come out of here. If you write them down, we got some winners. So those of you listening, you need to come to the group.
There you go.